All right, what's going on, guys? So today we're going to be talking about LLCs to S corps. We might touch a little business structure, but stay tuned. We're going to help Marche here figure out how to pay yourself as an LLC and switch to an S corp. So here is our basic illustration, right? So as an LLC, we know that this operational LLC here is making money, right? It makes the money. We're gonna pay our bills out of it, right? And then for you to pay yourself, you're gonna do what's called an owner's draw. And that's where we're gonna go in here. We're gonna transfer money from the LLC to your personal account. So it's just to be clear, it makes sense for you to have two separate accounts. So you want to have a personal account and you want to have a business account so that you don't have what the IRS call as commingling funds. So you can write a check from your business to your personal. You could do like Zelle, you could do Cash App, right? Or whatever it looks like that shows that you've regularly been moving money from one place to the next. So, the rules of an LLC, though, right? So basic is you can't be on payroll as the owner. You only self-employment options for healthcare, and you pay taxes on the profit plus the owner's draw. So this is key because a lot of people think that I did an owner's draw, my business is separate as an LLC, and I have to tell them like, no, it's not. So if the business made money, if it was still money in the business and you had the owner's draw, so let's just say you took out $20,000 throughout the year. So if you took out $20,000 throughout the year, that means you made $20,000 a year. And then let's just say at the end of the year, your business kept another 10. Right, like you didn't spend $10,000 out of the account. So at the end of the year, we will have you paying taxes on the $30,000 because the LLC is what's called a flow through. So it's still associated with you.
Right.
So the way the taxes work is we're gonna pay, you're gonna make money, gross income minus expenses equal profit plus the owner's draw, and that's the money that you're taxed on, right? And so. Key factors is, you are the business owner. You file it on the Schedule C attached to the 1040. This entity pays the highest tax, is 15.3% on just self-employment to contribute to Social Security, right? And so then you still got to factor in ordinary income tax on top of that. So it's typically more tax, right? And so the easiest way to switch out of this is to go ahead and switch to an S corp. And so when we go S corp, right, this is where more tax planning come into play. So as an LLC, like just the example here, right, you made $100,000, you pay 15.3% of that, that's $15,300. When we go to S corp, what you want to do is now as the owner, you could be on a W-2. Right? So when we put ourselves on W-2, with this, you want to kind of keep your wages low and kind of profits high. And so this is why I did a 70-30 split. So $30K in the W-2, you're paying a 15.3% of that based on what you take out. This is like if you got a regular job at McDonald's or whatever, you pay yourself a paycheck. And you'll pay the $4,500. You keep the $70K in the S corp, and it's not taxed as income tax, right? It's taxed as profits on the shares, so it's a different type of tax. So with that, right, we saved $10,000 because we only paid really the $4,500 in our W-2 off the 30%. So this is like a major hack. It's just in order to do this, we got to make sure that we can sustain employment. So the business is making enough money where the employment can sustain itself, and then we can do this over time, right? Because it's kind of hard to switch out of it. And then you just want to put yourself on the official payroll. So you can do a software with QuickBooks, Gusto, Paychecks, right? You can hire an accountant. You can get a payroll company like ADT, right? You want to register with the Department of Revenue, the unemployment insurance, and this is where you're going to pay your taxes quarterly. And you want to make sure you set your hourly wages. And so you want to make sure by January 31st, you issue out your own W-2s and 1099s that's due to employees and record it with the IRS.
Got it.
Right, so most people who switch to this, we start to do more, sophisticated planning. And so with that comes, like what these numbers look like. So you want to make sure that you got the bookkeeping, your accounting good, or CFO services depending on how much money you make.
Okay.
So it's simple.
Got it. That was an easy breakdown.
Yeah.
Both.
Simple.
Got it.
So thank you guys for watching. We just broke down LLC to S Corp and making sure we have our numbers good. So I think we got Marche here on track with her business. And so be sure to subscribe, like, share, comment if you find this helpful. We out.